let's go to our basics. What the board's responsibility? You know, I always say, start with the board responsibility is to collect assessments, maintain the property, enforce the rules. If they do those three things, guess what? They're going to be a better association than any association out there. Just doing their job properly, effectively, they will be a better risk than the ones that are next door, the ones that are across.
HOA Insights is brought to you by 6 companies that care about board members: Association Insights at Marketplace, Association Reserves, Community Financials, Kevin Davis Insurance Services, HOA Invest, and the Inspectors of Election. You'll find links to their website and social media in the show notes.
Hi, I'm Robert Nordlund of Association Reserves.
And I'm Kevin Davis of Kevin Davis Insurance Services. And this is HOA Insights, where we promote common sense
for common areas. Well, welcome to episode 134, where we're again speaking with insurance expert and regular co-host Kevin Davis. We're recording this in late 2025, trying to get our arms around what has gone on with insurance this year. Higher insurance premiums have been headline issues all year, and our regular listeners may think the title of this episode sounds familiar, and it is. Early in 2025, we presented episode 92 to give you an understanding of what economic forces were at play, big economic forces, and likely what was going to happen. And a reminder, Kevin and I both live in the metropolitan Los Angeles area, and that episode was recorded shortly after the devastating wildfires here that made us both prepare to evacuate. So that's sensitive to our hearts. Friends of ours lost their homes. And we then recorded another episode, number 107, talking about rising insurance rates here in 2025. So we'll be reflecting back a bit on what went on this past year, so you'll have a better understanding of the dynamic forces affecting insurance at this time and into 2026. Well, last week's episode 133 featured an enlightening interview with Curtis Peterson of the Inspectors of Election. I was reminded that elections are a special event at your association. They're complicated, and having an expert in these multi-month projects can be a wise decision. There's no reason to tough it out and risk getting some detail wrong that unravels the whole process, undermining the trust you're trying to build in the association and possibly making you have to do the election all over again. It's much more of a minefield than I had appreciated. So if you missed that episode, or actually any other prior episode, you can take a moment and listen from our podcast website, hoainsights.org, or watch on our YouTube channel. But better yet, subscribe from any of the major podcast platforms so you don't miss any future episodes. Well, those of you watching on YouTube can see the HOA Insights mugs that Kevin and I both have. Kind of fun. Puts a smile on my face. I got it from the merch store, and you can browse through that from our hoainsights.org website or the link in the show notes. You'll find we have some great free items like board member Zoom backgrounds and some specialty items for sale like mugs. So go to the merch store, download a free Zoom background, take a moment, look around, find the mug you'd like, and if you're the 10th person to email me at podcast@reservestudy.com mentioning episode 134 mug giveaway, we'll ship that mug to you free of charge. We enjoy hearing from you, responding to the issues you're facing at your association. So if you have a hot topic, a crazy story, or a question you'd like us to address, you can always contact us at 805-203-3130 or email us at podcast@reservestudy.com. But today's episode comes straight from Kevin. He wanted to convey some thoughts to you in order to give you an advantage in understanding what's going on in this hot topic of insurance. So, Kevin, tell me the realities of what you're seeing here in 2025. Has it gotten better or worse?
Well, got good news for you and everybody who's listening. We have crossed to Rubicon.
Ah, nice.
Isn't that great? The first thing that comes out of my mouth is that we officially crossed to Rubicon. Okay. Now, what does that mean? Is that we can tell when insurance has became stable is by the reinsurance market. Now, when we talked in April, I said, wait until July the 1st, because July 1st, where the reinsurers get together and kind of determine what the rates should look like for the next 6 months. Okay. So your first question is, what's a reinsurer, right?
Yeah.
Okay. The reinsurers are the people who insure the insurance companies. So insurance companies take risk in, and insurance company can say, guess what? This is way too much for me to handle, so I'm going to push it out to other companies.
Got it.
So you got reinsurance companies out there whose one job is to take on risks that insurance companies want to offset a little bit.
Okay, so if State Farm is insuring your house, and something happens to your house, State Farm is going to be the first to pay up, but they have a backup plan. They've got someone else that can help them if their losses get too big. Something
Exactly.
like that?
Or
Okay.
what they may do is reinsure all their wildfire area or earthquake. They may say, I don't want to do that at all, but I'll take the premium. And this one part of it is saying, I'm going to push it over to somebody else, let them take care of it.
Got it. Okay.
Okay. So what happens in July the 1st comes is that historically rates at January the 1st too. January the 1st, the new rates come out and they say, guess what? We want more because we don't have enough money. Okay. We're losing money. But this is what happened this year is that they didn't say anything. It was very quiet out there. So when it's quiet, that means that,
It's flattened out.
it's flattened out. Exactly. It's flattened out. But it's more than flattened out. They start to panic a little bit because they start to lose premium. So instead of charging more money and it flattens out, what happens is you start to lose because before you're getting 10% more, 20% more, you're getting more money. But if it flattens out, that means the State Farm will say, guess what? We can keep more of that money now. Okay?
Okay. And if
So
they
State
are
Farm
able
will
to,
say, you know what? We're not losing much money because guess what? We raised the rates so high on our property that we're making enough money, so we're going to keep more of that. And so you have to reinsure and say, well, we want more of it. And then you got investors out there, the pension funds and all those, they're saying, guess what? You're making money in insurance now. And so all of a sudden, that allows us to cross the Rubicon.
okay, because insurance fundamentally is a business, and you got to be making money or you're going to step out of the state, or
Yes.
you're going to raise your premiums, or you're going to do
Yes.
something. Yeah. Okay. So,
And what they've done over the past several years, a couple things. They raised rates, they lowered the coverage, and increased deductibles. So over the past 2.5 years, guess what happened is that they started making more money. And when you make more money, guess who raises their hand and say, I want to be a part of that? Investors want to be a part of it. The companies who said, well, I want to make more money also. So one thing we talked about before, there was more demand than was supply. That was the whole thing. There's more demand than supply. The supply has gotten bigger. It hasn't gotten great, but it's gotten bigger to the point where it's kind of flattening out, which brings stability to the marketplace.
because when there's more demand than supply, and if the suppliers are making money, then other suppliers can step in and say,
Yes.
I want a piece of that too. And then it takes us back to high school economics, where we learn about supply and demand, and you want them to be somewhat balanced, not crazy offset from each other.
Yes. And another thing that when we talked about it in January, in early, past few years, insurance company, for every dollar they took in, they paid out $1.05.
You can't
So we
last
said
doing that.
And you can't last. And then but last year, for every dollar they took in, they paid 96 cents. Okay? So that's okay. This year to date, is about 94 cents. So now stability has entered the marketplace.
Okay, so we're going to have listeners saying, okay, does that mean my premiums are going to go down by a couple points?
Here's the issue, though. Even though stability is there, there's some things happen this year that really scared us. Number one is the fires. Okay?
Yep.
That was a $40 billion insurable event.
Yeah, that insured the entire industry. And as Los Angeles homeowners, you and I, that's shook us.
Yes. I mean, for example, last year, the whole year was $137 billion. Fire and for those kind of things, for hurricanes and wind, it was $137 billion.
That's
event
crazy large,
in
crazy
January
large.
was $40 billion. Okay, but since then, we had, hurricanes, we had wind, we had tornado, we had a huge tornado. The first 4 or 5 months of this year was a disaster. I mean, we spent more money this year. In fact, we expect to spend about $150 billion in weather-related claims this year. Last year, $137 billion.
So it's already above last year.
Yeah, already above last year.
At the time that we're recording this, it's already above last year. Okay.
Not yet, but they expect it to be.
Okay.
Expect it to be it. But right now, again, we spend $80 billion right now. So I mean, in the first 6 months, about $80 billion in losses from catastrophic situations. Meaning, what I'm saying is that it doesn't change. It's more than it was last year, but as a result of it, when July 1st came in, they knew these numbers. When July 1st came in, they didn't say we want more. Normally they said we want more. They didn't say. Now, they are going to want more money in areas that are catastrophe prone. So if you live in an area of wildfires or tornadoes, they will get more rate. They will get more rate.
So it's going to be locally dependent. So that's going to be wildfires, California, Arizona, Colorado, Washington?
Yeah, but it's wind, all kind of, anything weather-related. Let's say weather-related. So weather-related will still get their, probably still have some rate in there, but not significantly. Because again, what happens is when you increase that property for so much, and it's been quiet for the past, 3 or 4 or 5 months. They expected major hurricanes, and it's been quiet. And so what happens is that quietness, it kind of flattens everything out. There's comfort for the first time in the insurance world. We're feeling comfortable.
I was supposed to be at a conference last month in Sarasota, Florida, and my schedule got complicated. I ended up not going, but I was kind of interested in going because it got pummeled last year by a hurricane. I wanted to see what it looked like 12 months afterwards, what recovery looks like, because I've driven through the Palisades area here in Los Angeles, and it's just
devastating.
Devastating. And I was wondering how a local area responds to a hurricane, because that's different than responding to a fire, but losses are losses. Okay, so we had some tremendous losses earlier this year. The reinsurers are saying we feel that we're in a comfortable place, but still there's high risks are high risks. So
yes.
Florida hurricanes, wildfire areas,
tornadoes and things in Texas. I mean, you have a lot of things going on. But there's also part two. A couple of things we talked about earlier in the year. We talked about the weather. The second thing we talked about were the tariffs. The tariffs was a thing that we were worried about because now you have inflation and a cost to repair in place. That is the second area that we were concerned about. But guess what happened is that we haven't really seen those issues yet. We haven't seen the impact of inflation in terms of rebuilding right now.
Is that because rebuilding takes longer? It's going to take a multi-year process, or we're buying refrigerators and roofing material that were in warehouses that haven't been purchased with tariff money or facing tariffs?
Yes, I would say probably both. In other words, also too, as society, we get used to hearing tariff, and things are going up, and we've kind of ignored it. As humanity, we still go shopping, we go, oh man, I can't believe it costs more money.
Yeah,
it's just
still
life
buy
now.
gas.
Yeah, exactly. And so I think from an insurance point of view, they're spending money, but it's not impacting the bottom line right now. The tariff hasn't impacted enough where insurers are saying, we got to back away. We have a problem here. So again, I thought that would be a major problem about 6 months ago, but it has not been. And from an insurance point of view, it's been a problem for me because I'm spending more money now than I did before.
Yeah, well, that's a good point, because you and I, if I need a new refrigerator, I'll buy a new refrigerator, period. I just will. But if you're buying a house, the lumber's going to be a little more expensive. Roofing materials, the refrigerator, the washer dryer is going to be a little more expensive. But if you want to buy a house, you're probably going to buy a house. Is that kind of what it boils down to?
And that's what it boils down to. But also, too, is that you had those fires. And you had fires years ago. But it takes time to build and put, new refrigerators in and new garages. I mean, it just takes time. And so the things that I thought about, the three things I thought would happen that would really increase rates. Number one, were the weather-related storms. Number two, was it tariffs? And the third area is I was concerned about where these legal claims, these liability claims.
Oh, the nuclear verdicts,
the big
you've called them? Okay.
The nuclear verdicts. Yeah. In fact, we got to a point where we changed the name from nuclear verdicts to thermonuclear verdicts.
You're making up bigger and bigger, scarier names.
Yeah.
Okay.
And
Nuclear verdicts. Nuclear is what?
10 million or more.
And thermonuclear is?
100 million or more.
Yikes. That's inflation that matters. Okay. All right. So what has happened with those?
So now let's look at this. Do you remember the coffee, the lady who at the McDonald's spilled the coffee? Yeah.
Long time ago, right?
Long time ago, right? And that was a $3 million verdict, right? And we thought this was the worst thing ever. We thought, I can't believe they spent $3 million.
Yeah, well, you and I remember it.
Yes. Okay. Now, a couple of years ago, Starbucks had an ineffective lid on top and it burned somebody, and it was $30 million.
I don't know about it, which is amazing. So, because everyone heard about that $3 million one. How long was that? 10 years ago or?
10 years ago. Exactly 10 years ago. Yeah.
Okay. And yet there was a 30 million similar, and it got lost in the wash of other news.
Got lost in the wash. Yeah.
Oh, wow.
So that's what nuclear verdicts have done. So all of a sudden, what we do is go from nuclear verdicts to thermonuclear verdicts, which now you've seen $1 billion claim. And then the $1 billion claim was Johnson & Johnson and Monsanto. They had $2 billion claims out there.
Champlain Tower South. That ended up being just about $1 billion.
It was about $1 billion. Yes. Yeah.
That's a good point.
So we never talked about billions of dollars before. We never talked about hundreds of millions of dollars before. That's still scary. So we spend more money this year in paying these large claims than we've had in a long time. But again, insurers are not saying that, you know what, we're going to, increases are going to happen, but overall they're looking at different parts, different segments and saying, we are concerned here, and what we need to do is to underwrite better, look at accounts better, and be more efficient at the way we handle the business. And that's why right now they are able to do what we're saying they're doing, be stable.
I like that. Okay, we've stated the situation. We've got 3 issues, the weather related, and it is what it is, but so far so, I don't want to say so far so good, but we haven't lost our pants so far this year. Tariffs sounded bad, all that 20%, 50%. We've felt earlier this year like the sky was falling, and hasn't. Legal verdicts are big, getting bigger. So yeah, those are all going on, but I'm looking at the clock here. It's time to take a quick break, and I want to come back and just finish with underwriting better. So what can individual associations do differently to articulate that they're maybe on the better side of things, right? So
Perfect.
To separate themselves from the average association. Mm-hmm. Okay, so let's take a quick break. It's time to hear from one of our generous sponsors, after which we'll be back with more Common Sense for Common Areas.
Are you part of a homeowners association or condominium board? Making the right financial decisions for your community's future is crucial. At Association Reserves, we're proud to serve communities nationwide, specializing in reserve studies tailored to your community's unique needs. Our expert team helps you accurately assess your property's assets, forecast future expenses, and develop a solid funding plan. Whether you're a small HOA or a large condominium association, we've got you covered. Visit reservestudy.com to learn more and get a proposal for your association.
And we're back. Okay, we talked about kind of industry in big picture. Now, Kevin, can you guide us through what can board members do about their association? You talked about underwriters needing to underwrite a little smarter, so asking more questions. And we clearly want our audience to be on the positive side of that. How can they respond well so they become maybe a low risk or a favored account?
First of all, there's certain things we have to live with. If you live in an older building, it's an older building. There's not really much you can't bring into a new building, right? If you live in a weather-prone area, guess what? You live in a weather-prone area. There's not much you can do about that. Another area that's created a problem is the crime area. If there's a lot of crime in your area, certain things, you can't do anything about it, and you will be dinged for those things.
and location. If you're, on a lake, then you have boats, you have a dock, and there are hazards related to being waterfront.
Exactly.
Okay.
So
all right.
automatically expect to be dinged for things that you have no control over.
Yeah, the hazards
So-
that just plain exist
Yeah.
because,
You're playing.
well, that may be why you bought into that association, because you wanted to be waterfront. You wanted that grand look of that older building. It's classic.
Or a view in a area that's fire prone. You may want to be up in Lake Arrowhead or Big Bear or certain areas where it's beautiful, but guess what? You choose to live there, or you may want to buy an older place because you can afford it. Those are things you get dinged for. Your goal is to do this. Is not to be dinged as much as the association down the street. That's your goal. I'm going to be dinged because my building's over 25 years old. Okay, but guess what? That one down the street there, they're going to be dinged, plus 10%. Well, I might be dinged plus 5%. Okay, so that's what we want to do right now. We want to talk to the associations and say, your job is to say our association is a little bit better, okay, than the one across the street. Because again, as insurance professionals, we're going to look at all the associations in a particular area and say, I want to quote, I want to quote, I want to quote. So when they knock on your door, that agent knocks on your door and says, guess what? I want to quote it. You want to say that, guess what? We're doing these things to make sure we're better than the one down the street. And now my eye's going to get big because you're the one I want to write.
Yeah, because you're going to be a good account, an easy account. I can maybe soften the price, get you, and not have a lot of claims.
Yes, exactly.
Okay, good.
Especially today, because there's more supply than it was before. So before there was more demand than supply. We're in a world now where there's more supply. There's just as much supply as demand. It's about equal right now. And there will become a time where there'll be more supply than demand, and you want to be ready as an association.
Got it. Okay, so how do they separate yourself? What is that list that they can have to say, okay, this is...
Let's go through our basics. What the board's responsibility, I always say, start with the board responsibility is to collect assessments, maintain the property, enforce the rules. Okay. If they do those three things, guess what? They're going to be a better association than any association out there. Just doing their job properly, effectively, they will be a better risk than the ones that are next door, the ones that are across. Anybody else, because simple as that.
Kevin, you're making me think about love languages. My wife's love language is quality time. Doesn't matter if I give her a nice gift. She says I'm a lucky man because she doesn't love jewelry, but she likes quality time. So if I think I'm scoring points by buying her something, she smiles and knows that doesn't really make a difference. So what you're talking about is speaking the language of the insurance companies. And the language of the insurance companies is maintain the property, collect the money that you need to collect, and enforce the rules. That's their love language. You want to speak to them on those terms.
Speak to them on their terms, because as we talk to them about those three things, then all of a sudden the underwriter or the broker or whoever you're dealing business with, they can go back to the insurance provider and say, guess what? They're doing their job because they're a specialist. They're focused in on those things. So, in other words, you've maintained the building. We want to see your maintenance schedule. We want to see your maintenance policy, okay? We want to make sure you're doing the things that you said you're going to be doing, but you show them up front. We have a maintenance policy. This is our maintenance schedule.
And we're talking about a maintenance chart where we vacuum the hallways once a week. We clean the gutters once a month. We lubricate the something once a month, whatever it is. You have, okay, cool.
You're having proof. So again, then from a financial point of view, you're saying we have a reserve study. And guess what? We're following the reserve study. We're funding for the reserve study.
Funding it. Which is...
So you don't have to worry about, us, coming back and having a liability claim because guess what? We haven't funded the reserve.
Yeah, and that gets into collecting the cash because you need to collect the cash that the association fundamentally needs. If you got bills, you need to collect the cash so you can pay the bills, okay?
And we're enforcing the rules of the association. Because we're enforcing the rules of the association, guess what? We're not going to be sued later on. As an insurance, as an insurance professional, what I'm worried about is a property loss. That means, the roof is leaking. You have water damage claims. We
Right.
worried about that. We're at a place being on fire. Okay. Worried about the liability claims, a slip and fall, the loose railings. They didn't trim the trees over the stop sign or the caution sign. So we're worried about liability. Those are things we're worried about. If you're saying we have those two things under control, we're not, you don't have to worry about those two things. Guess what? You're going to look like a better risk than somebody who saying, oh, well, yeah, we have a maintenance contract, we have a maintenance agreement, and the maintenance person, we haven't. Again, it is about doing the best job you can do in your association, maintaining it. Now, here's another area that you and I love talking about, and that is the attitude in associations, because the attitude helps you to do a better job. There's something out there, a new word that we haven't talked about yet, called social pessimism. Okay, that's really permeating through society, and you can feel it. You go to places, and we just pessimists, and we just don't have that faith and trust in things. And that social pessimism is creating a problem for community associations, because you go to meetings and you're pessimistic, then you lack trust.
Complaining about the board. They botched the election. We have to redo the election. We didn't have a quorum for the annual meeting. We got to do that again.
And then you can't get things done. You can't enforce the rules. You can't maintain it, and you can't collect a special assessment you may need for the roof or whatever you need. So that's, again, from a community association point of view, you're in a great shape to handle insurance 2026, because right now it's stable. We crossed the Rubicon, it's stable. And to the point where, again, and we'll talk again another 6 months maybe in first quarter, you'll probably see rate decreases in about 6 months. So we'll talk about that.
We may hold you to that.
Yeah, okay, yeah.
Well,
This time I'm not giving a disclaimer. Last time I gave a disclaimer.
Okay. Well,
I feel more comfortable today than I ever did in terms of what we're looking at for next year.
Well, you're my insurance friend, so of course you're going to have a disclaimer. Only if this, only if that. But I like what you're saying, because now my brain is thinking of my first condominium. First condominium had overhanging trees, and so tree trimming is not just aesthetics. Tree trimming minimizes the fire hazard. It minimizes the damage during a windstorm to the roof. There's all these things that you can do to say, we are doing these things. And I can start to see the insurance agent smile.
Exactly.
And, these little things that matter, speaking their love language and saying, we have a reserve study. We updated it. And now look at our budget. We are funding per the amount that's recommended in the reserve study. All these kinds of things. Our landscaper, we increase the landscaping from, a couple thousand a month to $2,500 a month, because they now once a month clear the perimeter vegetation, just those kinds of things. Is that,
yes,
that's what you're talking about?
But it's so important because, again, why is that important? The weather area, there's two areas that we're concerned about. Weather, but you may live in an area that's no weather damage, but we all worry about liability claims. The liability claims are the ones where that we used to see $1 to $2 million claims. Now we're worried about nuclear verdicts. Well, look, we're not worried about a thermonuclear verdict in a condominium.
Thank you. I'm glad to know that.
But what are we worried about, really? We're worried about there are 1.3 million lawyers out there. 1.3 million lawyers. About 30,000 every year come into, and they want to make money. And what they're doing now is specializing in a certain area. And as they become specialists, guess what they're doing? They're fine-tuning their skill set. First of all, what they do is get a copy of your insurance policy. And they'll look at your insurance policy and say, okay, you have $1 million here, $5 million here, $10 million here. Well, guess what we're going to do? We're going to sue for $10 million. Whatever limit you have on the policy, I'm going to sue you for it. Okay. So they're being smart enough to say, this is what we're going to do. And one more thing they're doing, Robert, and this is the thing that scares us insurance more than anything else. You're a new lawyer. You've put your shingle outside.
Yeah.
You go to a community association, find out that they didn't trim the trees, and it's blocking the stop sign or yield sign. And a person runs through it, and he gets hurt. And then you do more research and find out that, wow, guess what? It's not the first person. There's a third person. There's a lot of people here who had gotten hurt because they failed to trim that tree. And union owners have said, guess what? You got to trim that tree. So now all of a sudden, I'm a new lawyer and I could make a ton of money off of here. But I don't have resources. I don't have anybody on my hand. So now what the lawyers are doing is going out and getting investors.
Oh, to help fund it.
Guess what? Yes, I have a $10 million lawsuit against this association because they failed to trim the tree. They were notified they should have trimmed the tree and people were damaged and hurt by it. So now I know I get $10 million. You give me $2 million so I can hire people to do it and you'll get $4 million back.
Yeah, 40% contingency on that.
But the investor will get money. I'll get some money, you'll get some money, and guess what? We're going to clean up. So you got a brand new, fresh out of law school, got his law degree. He puts out, he happens to live in an association and he sees it. And he can make a killing just by going to investors, third-party investors, and saying, back me up on this thing. And that's what's hurting us from the insurance point of view right now, those third-party investors.
Got it. Well, gee, I have mixed feelings now. I like to end episodes on a high note, and you got me with my arms all crossed here. I got all nervous. We know our audience.
Yes.
We know running an association is hard. It's hard to be perfect, and there are going to be things that you do wrong. And so that's why culture is so important, that you're trying hard. You talk about lowering the temperature, increasing the community aspect of it. And so you don't have, you're always going to have the 3% or so that are just always unhappy. But to minimizing that, getting more people on your side and stacking, just like what you talked about, stack the odds in your favor. So, okay, do what you can.
And again, what we're talking about with social pessimism is more about, guess what? You understand that's out there, and as a board, that's not us.
Okay.
We're going to be excited. We're going to be focused. We're going to do our job. We're going to enforce the rules. We're going to maintain the association, and we're going to collect assessments. And that's our job. If you do that, we don't care about the attitude of the association. Our attitude has to be the right attitude. And now when an insurance agent comes to your door, you're going to tell them that. And the first thing you're going to say, listen, are we up for a discount this year? And hear what they got to say. They may say, you know what, I'm going to see if we can get a discount.
I like that. Positive. Keep your chin up and think positively. Well, I like that. We can do that now. So
how's that an ending?
I like that. Yes. Kevin, hey, as always, it's great talking with you. You take us to highs, you take us to lows, you take us around circles, but I come up learning something. Today I learned the love language for insurance companies. So that's cool for me. I'm going to get that into the show notes. So any closing thoughts to add at this time?
Again, right now, you're in the driver's seat. That the associations next year will be in the driver's seat. They needed to ask for a discount, but they have to show they can deserve a discount.
I like that. We've given some motivation. Well, we hope you learned some HOA insights from our discussion today that helps you bring common sense to your common areas. Thank you for joining us today. We look forward to bringing many more episodes to you week after week after week. We're going to be here, and it'll be great to have you join us on a regular basis. So spread the word.
You've been listening to HOA Insights, common sense for common areas. If you like the show and want to support the work that we do, you can do so in a number of ways. The most important thing that you can do is engage in the conversation. Leave a question in the comments section on our YouTube videos. You can also email your questions or voice memos to podcast@reservestudy.com or leave us a voicemail at 805-203-3130. If you gain any insights from the show, please do us a huge favor by sharing the show with other board members that you know. You can also support us by supporting the brands that sponsor this program. Please remember that the views and opinions expressed in this program are those of the hosts and guests, with the goal of providing general education about the community association industry. You'll want to consult licensed professionals before making any important decisions. Finally, this podcast was expertly mixed and mastered by Stokelight Video and Marketing. With Stokelight on your team, you'll reach more customers with marketing expertise that inspires action. See the show notes to connect with Stokelight.